that two of the partners of that collaborative are on the call today. So what I'd like to do is introduce our speakers. Stephanie is with Colorado Enterprise Fund, CEF, and Daphne and Jeremiah are with CEDS. And CEF and CEDS, basically what those are nonprofit lenders. What does that mean? That means they're not, you know, your fat cat bankers, if you will, but rather lenders who work with disadvantaged communities, communities that haven't accessed capital in the past, immigrants, refugees. And so we thought we wanted to have this session today so you all could learn more about the lending products that these two lenders have available and have a space for you to ask questions directly of them. We are going to have an office hours section at the end of today's presentation where you could ask direct questions of Stephanie, Daphne, and Jeremiah. Or we will follow up with you all later to make introductions. We recognize that these topics are pretty dense, and so we thought we would have this education session with Stephanie and Daphne and Jeremiah. So before we do that, we have some poll questions to get us going. We all know that this has been a terrible year. The hardest year for many of us. And so we wanted to get this conversation going by asking you, how are you feeling about your business? And so we're going to launch that poll. Are you confident, somewhat nervous, or nervous? Or maybe totally outrageously nervous? No, that's not an option. You guys can do that poll. Ready? Okay. So 33% said somewhat confident, and 67% said somewhat nervous. So that is not a big surprise given the year we've had. Let me ask you another one. Have you ever attempted to get a business loan? Or, you know, maybe you've used friends and family to raise your money for your businesses. But we'd like to know, has anyone gotten or attempted to get a business loan before? Yes or no? Poll results. Okay, so this is flipped now. 67% have attempted to get a business loan, but 33% have not. So maybe you raised those dollars among friends, maybe you used your credit cards, you know, but you did what you had to do to move forward with the capital you needed. Okay, so moving forward, do you think you'd be interested in getting a loan in the next 12 months? And I want to just emphasize, we are not here to pressure folks to get loans, but we want to educate you about it. And so, you know, do you think you'd be interested in getting a loan in the next 12 months? Yes, no, or maybe you don't know. You don't know. Yep. That's what the year looks like. Oops. Huh, okay. That's a very impressive number. So all of you on the call, because that's 100%, I'm not good at math, but I'm good about that enough. You are interested in getting a loan. Okay. So last one, when we say the word loan, how do you feel? Whoop, interested, uninterested, nervous. Whoops. Okay, we have the wrong words on this question, but I think maybe we'll say, when we say the word loan, how do you feel? Interested, I guess, yeah, okay. You're interested when you hear the word loan. Or you're not interested, or maybe it makes you feel nervous. Whatever. Okay. This is really interesting that, 60% of you said you feel nervous, 40% are interested. So I think that means that, maybe we'll have a really good conversation here with our two speakers, Stephanie and Daphne. And so I would like to now pass it over to Stephanie and Daphne, who are going to walk you through presentations and also try to ask you guys questions and engage you in a conversation. So next slide. And next slide.
Next slide.
There we go. Take it away, ladies.
Okay. Hello, everybody. I'm Stephanie Fox, and I am with Colorado Enterprise Fund. I have been with our nonprofit organization for almost 3 years, and it is a true honor and pleasure to work with small business owners like yourselves and to have the opportunity to be a small piece of success and growth and just meeting you where you are and helping you with your financial goals. I was very excited today because I think in working with our partnership with the FACS, a lot of planning and preparation goes into a lot of this work, but I think us getting right in front of you guys today, Daphne and Jeremiah and I, that's what we've been waiting to do because we want you to know we are the faces of your hopeful financial partnership as you guys look for business funding or have questions around loans. We want you to know that you have people that you can trust as nonprofit lenders, that we are here for you and we want to champion your success. We want to give you good guidance and to help you overall. So here we are today. We're going to start this conversation and hopefully educate. And we're going to be here, like they mentioned, in the breakout rooms afterwards, so we can have a little bit more individualized conversation. However, if today is not the day, you can take down our contact information, you can talk to Sabe and book an appointment, or you can call us directly. But we're here, and we know timing is everything when it comes to finances and your business. So I think that's one of the most important takeaways we wanted to share with you today. For our agenda, Daphne's going to start us off and talk a little bit about financing options. What is out there? Maybe it's not a loan. Perhaps there's other ways to get money for your business. Secondly, I'm going to talk about the basics of lending, sort of a lending 101 course, crash course. We'll talk about what's required to get a loan, what lenders look for, what our specific companies will look for. Then we're going to talk a little bit about the lender landscape, because all lenders are not created equal, and where you get your money does matter. So we're going to talk a little bit about that as well. So right now, I'm going to give you to Daphne, and she's going to get us started.
Hello, everyone. I'm Daphne, and like Stephanie just said, I am from SEDS Finance, and I'm an investment officer, and I've been with SEDS for the past almost 7 months, and it's really been a pleasure working with small businesses, like then small business owners like yourself, just sort of helping them getting a loan and getting started or just growing their business. So yeah, let's dive a little bit into financing options. And the reason why we're looking at financing options in the first place is because, when we talk about starting or growing a business, you definitely have to talk about financing. And you need money, you need finance. That's just the reality of life. You need finance to start or grow your business. And so knowing that there are options out there, there are sources of capital out there is very important for you to know as small business owners. So when we, like Stephanie just mentioned, most of the time, we talk about loans, or we just think about loans when we talk about financing options. But there are alternatives out there, and we'd just like to present these alternatives to you so that you could look at them, look at their pros and their cons, and definitely choose what's best for you. So the grants, for example, is one sources of capital that's out there. And what are grants? Grants are money given by a government or other organizations for a specific purpose. And grants, they have their pros, and some of their pros include the non-repayable. I just talked about money given, so it's not a loan. It's given to you, and you're not expected to pay back. It's available. It's out there. You just need to do some little bit of research. And it's also credible because most of the time, these grants are coming from the government. We've seen some of the SBA grants, that came in during the COVID, the height of the COVID pandemic. And so it's really credible. But there are cons as well. Even though it's money, even though it's given, it's not expected, to be paid back. But there are cons. Competition is one. Since it's free money, a lot of people, tend to want to go for that as opposed to a loan. There are strings attached. You have funders requirements. For example, the SBA had their requirements, so all of those are things that you need to take into consideration. And then there's some reporting expected for some grants, not in all cases, but for some, you have to report whether it's on a quarterly basis or you have to submit some reports. Another source of capital that we have that small business owners like yourself can utilize is crowdfunding. Crowdfunding just basically means you're raising small amounts of money from a large number of people. Now it's a little bit easier because there are platforms out there where you can go and try to fundraise for your business. And the pros are many, including the fact that as opposed to loans where there are requirements, and grants for crowdfunding, there may be very, very minimal requirements, very little requirements. And with crowdfunding, you're not really expected to give any of your company or part of your company to anyone. So no equity sharing there, which is it's a plus for small business owners, but there are also cons as well. There are also things that you need to take into consideration. And one is that, your business idea might be stolen by other people because you're putting your business out there on that platform. You're telling people about your business, you're fundraising, you're talking about your products, you're talking about your target market. So you have to be ready for that risk, And the other con is that, since you're fundraising for a certain amount, some platforms, for example, like Kickstarter, which is a crowdfunding platform, and Indigo, they might actually require you to meet that funding amount. So let's say you want to fundraise for $5,000 and you have few donors who have given up until $4,000, but because you've not met that threshold, they may not give you that money at all. They may return that money. So that's something that you need to think about too. Another source of capital for small business owners that we know about, that we've talked about, we've just asked whole questions about loans, is loans. That's what we know, whether it's going to the bank for a loan, whether it's coming to a CDFI for a loan, or whether it's even getting a credit card, or even payday loans. Loans are money that you borrow, but you're expected to pay back, and you're expected to pay it back with interest. And of course, the pros is that it's out there, available from a wide range of sources, and it's easier to access, relatively easier, than grants, relatively easier than the other source of funding that we'll look at, equity finance. But the cons, as you may be aware, some of you who have taken out loans for your business, is that there's higher interest rates, there are collaterals required of you, and that might not be ideal for startups. And that could also impact your cash flow. And the last one that I want to mention here when it comes to sources of capital is equity financing. Equity financing is just basically when you're raising capital, raising money for your business through the sale of shares. And so you might probably need a short term to borrow or to get some money for short term needs for your business. And so you might decide to sell shares, so sell your company shares. The pros is that it's ideal for entrepreneurs with low credit because, they're selling their shares. I'm giving you something for something in return. There's potential for more money, more cash flow. But again, as always, there is the risk, or there's the con, which is you have to share your profits because you're selling those shares, right? And then, of course, with profit sharing, there is also shared decision making. So it's not just you at the helm of things. It's not just you alone making those decisions. The people that you've sold shares to are also in there making those decisions. Can we just move to the next slide, please? Yeah, so we've just talked about all of the different sources of capital, but then to access some of those capital, your business should be, at a stage, at a specific stage. And so, for example, personal savings, anyone, startups, established businesses can always reach out into their personal savings to start a business. You don't need to be an established business, for you to dip into your personal savings, right? But when it comes to grants, for example, if your business is, or if you're a startup, if you're just really, you just have a business plan in place and you're just looking into going into that business, you might not be able to access some grants, because some of the requirements might ask you to provide profit and loss statements for a couple of years down the line, and so many other financials that you as a startup might not have. So just bear that in mind, that, look at the stage in which your business is, and then you can know whether, you're ready for any of these capital funding sources. So for crowdfunding, for example, if you're a startup, you can apply for that, right? Because that's what it is for, raising money. Loans, you also have to look at your maturity level. If you're going for a loan from the bank, then you probably should have been established, or you probably, should have other investors backing you and things like that. And when it comes to equity, that's like selling shares. So definitely it's for an established business if you're looking into equity financing. Can we move to the next slide, please? So we've just talked about sources of capital, and we know we've just talked about how important financing is for either starting small business or growing those small businesses. But I just want to pause and ask us, have you faced challenges when seeking finance for your business? And if anyone wants to just jump in and share their experience, that would be great.
You can unmute yourself and speak, or raise your hand if you want to.
I will say something. I think it's difficult as a woman getting any financial needs met. I come into problems with opening a small business right before the pandemic, number one. And then if you don't have your 2019 taxes, obviously I don't, because I wasn't in business prior. And then there are rules and regulations with the PPP loans. You actually do have to pay a percentage of that back now. So it's not just free money with the grants. And then the lenders' interest rates vary and fluctuate. If you actually go out of business at any given time with those, with the money that's being given to you through a loan, you actually have to pay it back. So if our businesses don't succeed and we take a $60,000 loss, we have to pay that back as soon as we close. So there are a lot of variables that I don't think are being discussed. And yeah, I mean, it's not as easy as you're making it seem. It's not. I've run into a lot of doors, and I can't imagine, people that are from different, that don't speak English and need an interpreter, like they're just coming into this all the time. So I don't, I'm not sure what the answer is, but it's not that easy.
Yeah, and I agree with you. Are there any more, by the way, before I? Yeah, I agree with you. There are challenges. These are challenges that many of our entrepreneurs face on a daily basis. And in fact, that's why I raised this question before actually going into the next slide. And so we will look at some of those challenges, including the ones that you just really brought up. We can go to the next slide, please. Yeah, so you just talked about, it's interesting, you just talked about some of these challenges. And one of the things that you mentioned really, even with the PPP, is the tax returns and putting, together paperwork. And these are some of the barriers that small businesses, and you also talked about language barrier as well. So these are some of the challenges that our small business owners face when they want to access finance, whether it's a loan or whether it's a grant. And another barrier that they face is the credit history. Even with working with SEDS, we see that, we have people coming in with either no credit history or, credit history that needs to be worked on a little bit. And so when you go to a bank, for example, or even with some of the grants that are out there, they may require a certain credit score, for you to get approved for a loan. So that, of course, automatically becomes a barrier and becomes a problem for those who do not have a very great credit history or credit score. And traditional lenders such as banks, they just believe that you will default on these loans, because of your personal debt that you have, or business debt, or just, that your score is not really so great and they may not approve you. And your credit history also has the tendency to determine your interest rate. So for those that will offer you credit, even though your credit score is low, the interest rates will be so high. Another barrier that our entrepreneurs face, is just business plan, not having a business plan, and financial lending institutions will require you, even the government, would require that you have, for example, a business plan, just detailing your business. And if you don't have that, then automatically you may not be approved for that finance. Paperwork and financials, like you mentioned earlier, is really important as well to get a finance, to get a loan, to get a grant, financial statements, projections, and the like, profit and loss statement. So if you've not been keeping track of those information and you don't have that, you may not have access, or you may not be approved for those loans or for those grant programs. Collateral is another one. This is really big, because lenders, we often want to minimize risk. That's just the reality. We minimize risk by attaching appropriate collateral to a loan. So if a small business owner is coming to us or is just starting up and doesn't have any collateral to back that loan, then that loan may not be approved. So it may be difficult to really get any sort of financing without collateral. And loan size as well is also an impediment, can also be an impediment, because you're looking for this amount of loan, but at the same time, you do not meet all the requirements. So definitely the lender has to protect itself, and they will definitely not give you that amount that you're asking for. And so at the end of the day, they may give you an amount of loan, that may or may not even make sense, or you may need to go to several different other sources, several different other lenders just to get what you actually wanting. Can we move to the next slide, please? And I will just...
Thank you, Daphne, for that section. You can move to the next slide, please. So in just reflecting on the question at the beginning of our presentation, I know the wording was off, but we asked you all what you felt about, getting a loan or what that meant. And I think, some people, it's nervous, but at the same time, people want to, or they're interested in it because there are two sides of it. The idea of getting a loan is wonderful because it's the idea that you're injecting capital into your business, whether it's hiring people or buying equipment or working capital. Those are all positive things that we hope that happen. However, as Amy mentioned, that having a loan is a very big responsibility and a very big commitment because not only does your business often guarantee that loan, but you personally have to guarantee that loan. So most lenders do require that, including Colorado Enterprise Fund. So there are risks involved with taking that loan because you have that monthly payment on every month and you have to meet the expectations of the business. So definitely that word loan can conjure up a mix of emotions. Next slide, please. Lending basics, I'm not going to go through each of these terms, but as you can see on the screen, these are oftentimes words that you'll hear if you've talked to, maybe your everyday business banker, or if you've called on a lender before. You have a principal balance of a loan. That is the amount you borrow. Every lender will have different interest rates and terms for their loan. And cosigner, oftentimes lenders, depending on the level of risk, will ask if there is somebody to guarantee that loan. That person is called a cosigner. And many lenders offer this opportunity because perhaps it is a startup business, or perhaps you don't really have a lot of your own funds in. A cosigner is somebody that believes in you and your business. We don't necessarily know them, but you've brought them to the table and said this person is going to share in that risk. And oftentimes a lot of our loans are done with cosigners. Next slide, please. Okay, this is the real crux of lending in a way. It's called the 5 C's, and it's somewhat, it makes it easy to remember, but it's basically what our job is based on. And when we talk to any potential, business owner or somebody that is looking for a loan, this is what the lenders are going through. They're not going to say, oh, what are the 5 C's? We don't expect you to know this, but these are the ways that we're analyzing if we can help. So the 5 C's are capital, and capital really means how much money you're putting into the business. I'll explain a little bit more on the next slide, but there's capital, condition, capacity, collateral, and character. You can go to the next slide, please. Okay, we'll break some of these down here. Capital is important, especially for a startup business, because this is what if you're coming to us and saying, I'd like to borrow $50,000, most lenders are going to say, well, how much have you put in of your own personal funds? If a business has been existing for 5 years, we can often see from the financials whether they've kept their funds in the business or maybe not taken on other debt and they've just invested back. So the capital piece is more important, I would say, when you're talking about a true startup business. We want to know that you're willing to put some skin in the game, so to speak, and to help, and that you believe enough in yourself. So if you were to call us and say, I want 50,000 or 100,000 or whatever the number is, and say, well, no, I don't have any money. Well, that's a red flag for a lender, because we need to know that you've put in some funds and you're sharing that risk. Otherwise, there's nothing on the line for you. Condition is an interesting sort of C, because this has to do not necessarily with you personally, but it has to do with the state of, maybe the market that you're in. If someone came to me last March or in April and said, I'm going to open up a gym, can I have funds? Well, we all know that gyms were closed at that time. So that's a sort of a condition that we would see. And granted, it's temporary, but it just speaks to what that means. So whether it's certain times of, business cycles or times of the year, it just really depends on what the purpose of the loan and what the sector that you're working in. That's a reflection of that. Character is an important piece. And this doesn't mean necessarily that we're going to say, please give us reference letters. I mean, some lenders might require that, but this speaks to perhaps you've worked in, maybe you're a pet groomer and you've worked in a pet salon and you've been a groomer for 10 years and you finally want to go out on your own, but you know that industry, you've put in the time, you know what it takes to be successful in that business. Perhaps it's a degree or education or certificate. That also speaks to character. Another piece that CEF looks at is what have you done to sort of prep yourself or improve yourself in the business world? Have you gone to coaching at the Small Business Development Center? Have you worked with MICASA? Have you, networked within the community, members of a chamber of commerce, that sort of thing? And how much are you really putting not just spending your time at your workplace and what you're doing, but what are you developing and building within yourself for your business? Next slide. Capacity. I would say this is probably the number one C. Capacity really equals cash flow. And what we're looking at with capacity when you're coming to us for a loan is how are you going to pay that back? Do you have the actual cash flow coming in, whether it's the business, the net income from the business, whether it's outside income, perhaps you live in a household with other people earning income, a spouse or a partner that could sort of back that up, that we know there is an overall global way to pay the business payment, the loan payment off every month. So this is really one of the main ways that we're going to analyze the loan. And we're going to do this by getting your financials and looking at the net income on your tax return. We're going to look at your profit and loss statements and your balance sheet to determine, do you have the funds left over every month to pay what our loan payment would be? The last C is collateral. Collateral, every lender has a different requirement for collateral. So I'll speak to our particular fund, and that is we're flexible. So for certain loan amounts, we will just put a blanket lien on business assets. We're not necessarily going to ask you to pledge your home as collateral or to take a vehicle. So it really is flexible, but collateral is that piece, like Daphne said, that is the security that the lender has that the loan will be paid and what we would get if you did default. Next slide. So what lenders, I like this, what lenders love. Now you don't necessarily need to have all these because sometimes that's what's great about working with organizations like ours. We are very patient and flexible is what I call it. And we can coach business owners to get them to the point that they're ready for getting the loan, but it is nice to have organization to know the answers to the questions that we might ask, like to know what your business revenue is year to date, what is your net income after all the expenses. And it's been very important to be upfront. This speaks to the character piece a bit. If I'm talking to a business owner, everything looks great on paper, but they haven't shared with me that they had a bankruptcy 5 years ago or 3 years ago, then I just don't know why that wasn't brought up front. We can actually do the loan if you've had a bankruptcy, but if you're keeping that from us, what else is there? So it's very important to just put it all on the table. Everything is kept confidential. We're not sharing any of your information, not even within this organization and this partnership. Everything does stay within the financial institution's, walls. Professionalism. This just speaks to, it's great to have a nice relationship where when we request documents and we need that and you send that, and then it goes both ways because we can move your loan along faster in the process if you've given us everything. So this just speaks to get the lenders what they need when they're asking for it. And lastly, just financials. It's really important to keep good financial records. Sometimes not everybody uses a certain system, but if you've kept things on spreadsheets or whether you're using QuickBooks, just being able to access that information, lenders appreciate that. Next slide. This is not an exhaustive list, but this is many of the typical documents that a lender is going to ask for. If you're a startup business, we do want to see a business plan and your at least first year projections. So I would say that is really important if you're a startup to have that ready to go. If you're an existing business, been around, coming for a loan, then again, financials of the business. Personal and business tax returns are important. Year to date, interim financials are used. And of course, just knowing before closing will often require things like the license and any permits you need in the business lease. And it's often good to keep a lot of these documents in this, a consistent place. So if you are needing to get lending or talking to maybe a couple different lenders, that you can just access that quickly, because we know you're working hard every day. I mean, you're running a business. A lot of people depend on you. So getting a loan often feels like a second job, and we don't want it to be like that. So that organization piece really can help you and eliminate some of the time so you can just get back to what you're doing. And I'm going to pass it back to Daphne now to talk a little bit about the landscape.
Thank you, Stephanie. So yeah, we're gonna talk about the lenders landscape right now. We've talked about financing, so of course we want to look into the lenders that are out there that are giving finances to small businesses. I know we might have heard definitely about banks, and other financial institutions, but has anyone here heard of a CDFI? And again, you can unmute yourself and just answer, or you can just put it in the chat box. Have you heard of a CDFI before? Okay, so that's why we're here, to sort of get this information. CDFIs, it just really stand for Community Development Financial Institutions, and these are like mission-driven organizations that offer affordable loans and other financial products and services to sort of help undeserved or underserved, communities. Next slide, please. So when we talk about the lending landscape, what we're really trying to talk about is the different lenders that are out there. We know traditionally the banks, they are like the traditional lenders. And there, again, there are advantages and disadvantages to each of these. For the banks, they're reliable. So definitely you go in there and, they're just gonna walk you through their loan products, and they're safe. It's low risk as well, because it's the bank, your money is secured. But there are cons as well to the banks as a traditional lender, is that they have strict requirements. Definitely you have to show the collateral. Stephanie was mentioning that for our organization, for example, there's a lot of flexibility depending on the amount of loan you want. But with the banks, there's no such flexibility when it comes to, for example, the collateral and your credit history and things like that. You definitely have to meet those requirements for you to have any loan. And equity contribution also could be an impediment to many of our small business owners, especially those who are just starting, because they've not really had the chance to invest any of their personal money yet into the business, and the banks would be looking for that. Another lender that is out there with what we call predatory loans or predatory lenders. So these are really out there. I know a common one that we know about, or that we might have heard about, are the payday lenders, wherein you can go to them and they will give you money within a short period of time before your income comes in. But at the end of the day, there are cons to those as well. And one of such cons would be the very high, interest rates that they charge. And then, of course, if you default at any point, that will negatively impact your credit. There are also, apart from the payday lenders, there are also, business owners who are predatory lenders, like for example, Kabbage that's out there. You can go and get a business loan to tidy you up or for cash flow. But at the end of the day, the interest, like I mentioned earlier, the interest rate is just going to really be high. And then we have the CDFIs, and that was why I introduced that question, if you've heard about CDFIs. So CDFIs are there. They are, like I mentioned earlier, they are mission-driven organizations, and they offer affordable loans. We're flexible. I said this is CDFI. And then we offer different types of financial products and services that we also offer to help you, the small business owners. And such services might include coaching. Stephanie mentioned that as well. Business coaching that we provide. So if you're not really at the point yet where your business is bankable, we can step in and help you, whether it's in putting together a business plan, a bankable business plan, or whether it's just to help you to think about those numbers and tracking your expenses and putting those together. That's where we come in and render such help. So it's not just really about the finances only, it's also about the technical assistance that we provide. Can you please go to the next slide? And because I've mentioned some of those lenders, I just wanted us to just look at this briefly. These are like the interest rates that some of these lenders charge, and we can see that they differ. And depending on where you want to go for a loan, or depending on where you think you like I said, you want to go for a loan, you should take into consideration these interest rates. We see, for example, the large national banks interest rates from anywhere from 2.6% to 5.1%. Again, you have to take into consideration that for you to get some of these interest rates, these really reasonable interest rates, for example, your credit score should really be like in the excellent stage for you to get these. And an interesting thing I want to note, I'm not going through all of this, but I just want to note, for let's see, online Kabbage. That's one of those predatory lenders that's out there. Their interest rate ranges between 20% and 80%. So it's like literally all of your payments that you'll be making will be going towards interest rates until you're done paying that, before ever you can start chipping off your principal payment. So these are just some of the things that you need to take note of when you are planning and when you're thinking about where to get finances from. Next slide, please.
Definitely very interesting and very significant difference in interest rates. Just real quickly,